Hello and welcome to your real estate journey expert tips for buyers and sellers. I am Dolly Torres and I am joined by Ana Garcia, CPA, very well known in our community and an expert on taxes. So, welcome, Ana. How are you?
Hi, Dolly. Thank you. I'm doing well. Thank you. How are you?
I'm doing great. It has been a while since we have been together to talk about taxes, but it is tax season. So I'm so glad that you took some time out of your busy schedule to come with me and kind of talk to everyone about taxes. And and that kind of let's jump to it because I keep hearing from customers calling and seeing what they can do to fix their tax returns for 2024 just to make sure that they are not missing or leaving any money on the table and whatnot. So is there any last minute strategies to save money on your 2024 tax returns?
There are actually, and I'm so glad that we are touching upon this topic because a lot of taxpayers either missed the opportunity to talk to a tax advisor or tax planner before the year ended. And it's a critical deadline to really get the maximum deductions possible on your taxes. But if you did miss that deadline, we still have a chance to add a couple strategies, mainly retirement and what is called the health savings account, which is not spoken a lot.
Got it. Can you tell me what is a health savings account and how you can actually save money on the taxes?
So we love the health savings account, and it's actually a strategy that the wealthy use to create more wealth, right? It is similar to a retirement account in the sense that you have the same deadline, April 15th, to contribute to the HSA, the health savings account. The You can contribute by yourself or for your family, so there are limits. And it's also similar in the way that you put the money and it grows, and it is tax free, so pre-tax, what we call it, right? So let's say that your income was $50,000 and you contributed $10,000 into an HSA. Actually, that's not the limit. Let's say you contributed $8,000, which is more like the limit for the whole family. That means that you're only paying taxes on $42,000. Same thing, the same principle applies to a retirement account. The advantage, though, and the difference between the traditional or a traditional IRA, right, retirement account, also known as 401ks, is that the HSA, you can take out the money for only for health related
Related.
expenses, right? So just like an IRA, you put the money and it grows tax free. It also lowers your taxes the year that you contribute. But in addition to that, you take money out and you don't pay taxes if you use it for health related
Real
expenses.
expenses. Got it. Okay. So that's interesting because I don't know if a whole lot of people use that strategy to minimize their taxable income, which I feel it's a really good idea to do that. And now, can you still, till today's day, can you still contribute to your retirement account? And
Yes, you
would that
can.
impact your taxes as well?
Yes, you can. So you could do a combination of both things, right? There's a limit that the government sets for how much you can contribute to retirement. And that's why we also complement with the HSA and some other accounts, right? So with the IRA, if you have a plan at work, you're supposed to contribute through your plan at work. So 401k plan, etc. But if you don't have a plan at work, if you're self-employed, or if you didn't contribute through your employer, then you have the opportunity to contribute by going to any bank that would hold a traditional IRA, retirement account, right? And so there are limits as well, but it doesn't matter. You don't have to put the maximum. You can just contribute. Even if you put $1,000, it's going to grow. And that's going to really make an impact in your retirement.
Is there
Um,
really a difference between an IRA and a SEB account?
Well, there's the different accounts, retirement accounts, and they're called different things depending on who has the account. So for example, if you're self-employed, that would be a SEP account. When you open the retirement account, it's called a SEP. Self-employed people can also open a solo 401k. And then you have, if you're an employer, it's usually called a 401k plan. So at the end of the day, it's more or less the same thing, but called different thing depending on your status, your, let's say, income status, where your income is coming from.
Got it. And can you do both at the same time? Contribute to your retirement account and your health account at the same time?
You can, yes. So having a traditional retirement account, 401k SEP, doesn't prevent you from contributing to an HSA. So definitely, yes, you could do both.
And what would be the timelines for that deposit? And whenever you give me that answer, I want to know, and also when would be a good time to meet with a tax advisor, a tax planner like you, to kind of go through all, I mean, because we only have a few minutes to talk through this video, so I'm sure there's a whole bunch more depending on each person's personal financials. So what would be the timeline before they can make this contribution? And then what would you suggest to meet with their advisor? Like, what would be that time frame looks like?
Well, so they have until April 15th to make this contribution. Whether or not they file an extension to submit their taxes later in the year, the deadline is still April 15th, right? So you have to go and contribute that, open that traditional account or make that contribution for the year before the April 15th of 2025, and it would count for the prior year. Okay. Now, if you have questions, if you want to know how much you should contribute to really have an impact on your taxes, and you want to meet with a tax expert, then the time to do it is right now. So you have enough time to plan, enough time for the preparers to work on your return, to do the analysis and help you in that way.
Got it. And what about, are there any other year-end strategies, tax strategies related to retirement accounts?
Well, there are different, in terms of retirement accounts.
It's just either an IRA or a Roth IRA, or, well, I guess
Oh,
I
the
don't
Roth IRA.
really,
Well, thank you for bringing
I
that
don't
up.
understand the difference between those two.
Right. So, okay. So the Roth IRA, the difference is that, as a comparison to the IRA, the traditional IRA and the HSA, the Roth IRA is not tax deductible. So what happens is you earn $50,000 in income, you pay your taxes on those 50,000, and if you open a Roth, let's say you put $10,000, it's not going to impact your taxes. It's not going to lower your taxes. It's like you pay taxes on the 10,000. The good thing is, and the difference between that, the Roth and the traditional IRA, is that when you take out the money, say when you retire, then that growth, you don't pay taxes on the growth. Versus a traditional IRA, you took advantage of the tax savings today, but when you retire and those 10,000 became 20,000, now you have to pay taxes on the $20,000 upon a retirement. And the question is, do you want to contribute to a Roth or do you want to contribute to a traditional? Your tax advisor, again, can help you decide about on this topic, but just so to give you a quick explanation, if you think that your tax rate is going to be higher today than it is when you retire, then that's really what determines whether you put the money into a Roth or a traditional IRA.
Good.
Now,
Guys,
one tip, because you asked, another strategy that you can apply is if you know that your income was low for 2024 and you already have a traditional account or you want to open a traditional account, then you transfer that money into a Roth, and that conversion will trigger taxes. But because your income was so low, you're going to pay very little taxes. Whereas that Roth amount is going to grow, and that growth is not going to pay taxes when you take it out.
interesting. And now, lastly, are there any some important things to keep in mind when implementing this type of tax strategies? Because
Yes.
everything sounds good, but is there any negative side to it or anything to really keep in
Well,
mind?
more than anything negative, I would say it's very important to know. I've had clients come and say, Anna, I already contributed to my traditional IRA. And when we do the returns, they don't qualify, and the whole contribution didn't do anything for their taxes. They were not able to deduct anything for taxes. So what's important is that you really get advice from the person that's either preparing your taxes. I think I would say that that's number one. And then when you open the account, make sure that you're opening the correct account, right? Also, you want to make sure that you're not overfunding accounts, because that could trigger a penalty and taxes from the IRS. So there are limits that you can contribute every year. You have to make sure that you're below those thresholds.
And those limits are normally being told by your CPA or whomever it's doing the tax planning.
Yes, the CPA can tell you. Again, depending on whether it's if you're self-employed, there are limits. If you are a W-2 employee, there are different limits. If you're doing an HSA single, there's a certain amount. If you're doing it as a family, there's certain amounts. Every year it changes. It's never the same amount. So it's important to know so you maximize your deduction.
Well, a regular person just like me, I think we just wouldn't know unless we go to someone that actually knows taxes. So I'm glad that you come here from time to time and kind of guide us through this, because it's so complex. At least that's what it feels like. So I really appreciate your time coming out, and I hope you guys who are planning to do your taxes. I know for some weird reason, Anna, I feel like sometimes people they want to change their CPA, but then either they are a little too lazy to get that done, or they just said, hey, I'm just going to do with that person, even though I know they're not doing anything great for me. Why do you think that happens?
It's human nature. I think they go for the easy, right? We as humans try to do the easy thing. If we have to think too much, make decisions, that's like hard. And we live such complicated lives that it's pretty much why we do that. But I really, really encourage everyone to try to find somebody who is an expert in whatever it is that you're doing. If you're a real estate investor, make sure you're doing your taxes with somebody who knows about real estate tax laws. If you want to find out about retirement, make sure you talk to somebody who can help you in that area. So depending on what it is that you do, make sure you're getting the expert advice, because it's going to be key. And sometimes we think that we're paying little and we're saving money by doing it ourselves, or just going with the cheap accountant in the corner. But it's really costing us money, because it's costing us money in retirement that you could be making. It's costing you money in tax savings as you prepare your return. And it's costing you money because you're dedicating the time to do something that you're not an expert on. So those are the things that we have to always think when we want to make the decision. And if you find somebody who you like and who is really bringing you those savings, you're not going to have to change again.
Good. Now, before we go, how difficult it is if I'm doing the taxes with one CPA and I have been thinking about changing, and they just want to go through you, for example. Like, how difficult is that as far as process? I mean, anything particular other than sending you the documents, or how does that looks like?
Yes, so we do have a process, and every accounting firm works different, right? We want to make sure that we're a good fit for the client, and that the client finds a good fit in us as well. So that process is pretty much, usually they send us an email, and we request that they fill out a short questionnaire, just so we get to know them before we talk to them. The next step is we talk to them, we get to know them, they get to talk to us and how we work, and it's called the introductory call. And after that, we'll do more of a discovery call. We present the findings, we'll present what we think, how we can help them, and from there we start working on their projects, whatever it is, right? And we do request their prior year tax returns, only because it gives us a picture of how much taxes they're paying, whether they have a business, two businesses, how we can really help them, and all the mistakes that or missed tax deductions that they're not taking. So with that, we have a good foundation for telling the client, this is how we can help you. This is what's going to be different by working with us.
Got it. Makes sense. Thank you, Anna. And and I keep saying lastly, but just questions comes up. So what do you specialize in? If someone is just looking at this video and they have been thinking about changing CPAs, what would they come to you? What do you specialize in?
So we specialize in real estate. That's one of our fortes, the industries that we work with. And we also work with small business owners because they are the ones that we can really help by maximizing deductions, reallocating assets, income. Shifting income is what we call it, from high tax bracket to lower tax bracket. And so those two are our main clients. But anybody really who wants to, grow their wealth, who wants to make sure that if they're starting out on their business and they want to start on the right track with the right foot, we help those people as well. So I think at the end, it comes down to those people who are really coachable, people who really take action. You'll be surprised how many people we try to help and we tell them what they need to do and they just don't do it.
Out of time or action. Just because they're stubborn? Now I'm just being noisy.
They just have a hard time making a decision, I think that's what it is. They have a hard time making a decision.
Got it. Makes sense. Anna, once again, thank you so much for your time. I really appreciate you coming out and spending this time with us to get us informed. You guys at home, here are our phone numbers. If there's anything I can do to help in real estate, I work in Florida and Kentucky. And then Anna, do you work all the US, right?
All the US. We have international clients as well who invest in the US. So
got it. Makes sense. Thank you guys. And I'll see you next week. Bye-bye.
Bye, everyone.
Thank you.